Hey everyone, how's it going? Today is March 4th, 2022. We got through February. We only had some massive protests and the beginning of an invasion, but here we are, another month that's probably going to be filled with a lot of historic headlines. But today, while we did talk a lot about Russia and Ukraine in last week's show, today we're not going to talk so much about the developments of the invasion and the warfare and the implications of that. We're going to talk more about the stuff that we usually talk about, markets and trading and, kind of the whole financial developments around this whole situation. Specifically today, I really want to talk about this idea that I've kind of marinated on in the last few days, which is I've gotten so used to, and I imagine a lot of people have gotten so used to this idea of there being one possible reserve currency that, right now it's the American dollar, before it was the British pound, and going forward, maybe it's Bitcoin, maybe it's the renminbi. But after what we've seen in Russia, I think the possibility of there being multiple reserve currencies and these kind of systems working either against each other or in tandem is more of the likely reality. And I listened to this great speaker, Balaji Srinivasan, and he's kind of outlined basically the three different types of currencies and world reserve currencies and hegemonies we might have moving forward. And I wanted to kind of share some of those insights with you. We're also going to be talking about, of course, the insane rise in oil prices. If you've been to the gas stations lately, you've seen it, and what it means for the stock market and ways that you can possibly capitalize on that as well. Not just by investing in oil or oil companies, but specifically companies that can be affected either positively by rising oil prices or negatively, and kind of how to distinguish between the two before going out there and making these big bets. So today, we're going to start off by talking about the big headlines out of this week. And while there were a lot of advancements and things going on in Ukraine in terms of the whole conflict going on, the thing that has really captured a lot of attention is all of the financial implications that have come as a result of Russia's invasion. You have their FX reserves being frozen, you have bank runs going on in Russia right now, and you have some very interesting comments from the Federal Reserve Chairman Jerome Powell that we're going to go into that I think is kind of history unfolding in front of our eyes. So the first thing that stuck out to me is Jerome Powell was testifying in front of Congress, and he said that it's possible to have more than one reserve currency, which is a very interesting statement, something that has not been ever said by a Federal Reserve Chairman or anyone of the like. And the second thing is this Bloomberg article here that we'll go through a little bit, talking about the weaponization of FX reserves and how America's freezing of Russian assets has probably sped up the timeline in which they're going to have to make significant progress in Ukraine or be forced kind of to retreat. So we'll cover that a bit too. But yeah, this month has been so interesting in terms of seeing all these things develop, and more headlines keep coming out. You not only have the U.S. government freezing assets that are held in American banks from Russian oligarchs and government officials, but you also now have private corporations who are just pulling out business from Russia as well. You have Airbnb, they're not going to be serving Russia anymore. Apple and Microsoft are no longer sending products to Russia at all. FedEx isn't doing deliveries. And a lot of these things are not, they're not mandated at all. These are sanctioned. There's sanctions on Russia right now, but these private corporations are allowed to sell products in Russia. But they are choosing to not be a part of it for, whatever reason. Maybe it's something to do with optics, of course. We know a lot about that. But it's important to realize in the midst of all this stuff going on, 30 to 40% of all of Russia's reserves are basically inaccessible for them right now. They built up this massive war chest of about $600 billion of assets and cash and government bonds over the last 2 years. And that, I believe, was kind of part of their strategy going into Ukraine, saying, look, we have the money to fund this war should it not, last just 2 weeks. And we also have money to, maybe instate someone to run Ukraine. We've just saved up an actual war chest. And they're finding now that that war chest is more easily seized or frozen from them than they had initially thought. And so, in my opinion, it will make a long-scale war basically impossible without external financing, likely from China, or things like conscription of Russian citizens to go fight this war on land. as well. Because in terms of things going on with their tanks, their planes, their weapons, the Ukrainians are putting up a much bigger fight than I think Russians anticipated, and it's going to take a lot of financing to really keep it going, and for them, I think, to eventually seize and hold down Ukraine. So yeah, while Ukraine is undergoing, the violence on the ground and the invasion through warfare, I don't think that they are going to suffer the same long-term economic consequences that Russia is going to. And what I mean by that is that, while there's a lot of large-scale destruction going on in Russia, I do think that there's going to be a lot of economic support coming their way after the war, as they are seen as the victim at this current point of time right now. And so, I don't know if they're ever going to be a part of NATO in the future. I don't know what the future is of Ukraine, but if it isn't de facto a part of Russia by the end of all this, I'm sure that they will be getting funding from the West to kind of rebuild and establish things down there. And, their economic circumstance is not going to be a walk in the park. But I think it's a bit different from what is going on in Russia. And in my opinion, Russia right now is on this kind of inalterable path to have their economy basically obliterated by sanctions, unless they can form more of a strategic alliance with China and develop kind of their own currency mechanisms and their own methods of trade that exist outside the US dollar and outside the SWIFT banking system. Because right now, while they've tried to remove themselves from it, they're finding that, there's a big problem having any correlation to the American economy right now for them. So what my sort of grand thesis, that is not my own, is that due to all these things coming down on Russia's head, this torrential downpour of economic sanctions, of kind of this, for better or for worse, the wokeness of not doing business with Russia right now, they are going to have a fundamentally different economy moving forward from here. They have had a very resource-driven economy right now. If you actually look, you can kind of see, let me just find the slide here. Where is it? So these are the main exports from Russia. This is Russian exports as a share of global production. Palladium, they supply 45% of the world's palladium, 15% of the world's platinum, 9% of the world's gold, 8% of the world's oil. And if you just think about all of these different commodities, these are all denominated in the US dollar. And again, if you look at Russian exports of commodities, I don't have the figure here, unfortunately, but I would guess it's well over 50% of the exports of the things that make up their GDP are commodity exports that are all priced right now in US dollars and do business in the US banking system. So what Balaji has kind of prophesized here, basically, is that there will have to be multiple reserve currencies for Russia to continue doing business. And China is also looking at this situation and looking at how swiftly the U.S. has moved to kind of sanction and blockade Russia from doing business with the rest of the world. And they're probably thinking, we need to also move to a system that cannot be frozen by the U.S. or Western allies. So what this boils down to is kind of like a Western versus Eastern view of the world. And then I think you have a third player, which is cryptocurrency, which is the kind of decentralized alternative to all of this, a currency that is not controlled by any one particular government or party. That's an open financial system that any single one of these countries could join if they wanted to. And so this is how Balaji has kind of broken it down, is essentially you have the West, and that is America and Europe. And the core thesis to their financial and economic policies are sympathy, and that capital should only do business with causes that are positive and not ones that, might discriminate against certain parties or groups. We've talked a lot about on this show how there might be an emergence of wokeism going on in the U.S. And you can kind of see, based on what has been going on with these private companies pulling out of Russia to their own accord, that they don't want to be associated right now with a country that is at war. Even though most of the Russian citizens have nothing to do with this invasion in Ukraine, this is something I believe is run by a dictator, and a lot of people kind of, understand that. They're doing a full-scale punishment, essentially, of the Russian people because they don't want to be associated right now with a country that is invading another country. So his thesis is essentially Western capital and Western economic systems are woke capital, and the ruling party creates financial restrictions based on sympathy. We've seen that over the last, few weeks. No donating to unlikable causes here in Canada, whether you like it or not. You have to admit that if it was a conservative government in power, you wouldn't have any of these restrictions. Why? Because they sympathize with the cause. So people are putting financial restrictions on causes, less to do with national security sometimes, and more to do with whether or not the cause is sympathizable enough. There is a rampant politicization of capital, and that's something that both the West and the East shares, in terms of how money can move. And if you're doing something that's unsavory, whether or not it's, maybe definitively immoral, if it's just unsavory to a certain political party, you can have now your bank accounts frozen. This is the main theme of February 2021, right? I think that there is a big correlation between what is going on in Russia and what happened with the Canadian protests. So on top of that, also, we talked about carbon credits on this show, and I think moving forward, there's going to be capital restrictions on who can finance and raise money if they don't have a ESG policy or an ESG mandate as well. The thing that makes the West a little bit different from the East is that the East is a bit more unified in their financial policy. In the West, I think we're always going to have this fragmentation of people who, are on the left side of the political spectrum and people who are on the right side of the political spectrum. But ultimately, both those parties, I believe, will tend towards censoring causes that are not aligned with their political beliefs. And you might disagree with me with that, and I'm curious what you think. If Trump was in office right now, do you think you would see the type of political sanctions that are going on right now in Russia? Or maybe that's not the relevant question, but let's just say, there was a Black Lives Matter protest. Do you think Trump would take actions to censor or block financing to that institution as well because it doesn't really align with his political beliefs? It's an interesting question to ask, but in my opinion, I do think that both left and right parties, pushed far enough, would censor financial freedom to political causes that they don't align with. And something that kind of goes into this as well is when we talk about, woke capitalism, there's a lot of intersectionality, and Balaji kind of talks about how under any situation, anybody can be a victim and anybody can be oppressor, and that will justify the means of censoring or doing certain things policy-wise. For example, I am male, white, and straight, so you don't really need to go far to look at me and say I'm an oppressor, right? I would also have a very hard recourse saying that I'm a victim unless I can, perhaps harken back to the fact that maybe I have, 30% Jewish in my DNA, and I can say I am a victim, going back familial history-wise. So intersectionality becomes so important in the way that people make their political and now economic decisions moving forward. But even if you happen to be part of a minority, there's always a way to classify yourself as an oppressor. You might be African American, disabled, but you're a male, so therefore you might have male privilege. There's no way to kind of fully distance yourself from ever being a oppressor, essentially, in this system. And so in this system, wokeness makes everyone think that they are a victim, but also an oppressor. And the trick with all of this is that it's the government or it's society telling you that you're powerful, right? And you must atone for your sins. And it's basically, in his words, coerced compassion. And so the decisions that you make economically, the decisions that you make with your freedom of speech, the decisions with who you associate with, are always going to be under scrutiny in this system. It's just a reality that we have to live with. But now we see it trickling into economic policy and financial policy and how we make our decisions, whether it's hiring people, whether it's who we vote for. It's very hard to separate from this. And so what you can do is you can look at this system a little bit like communism, where communism is redistribution of wealth. I would say that wokeness and wokeness Western political ideology is redistribution of status, right? Everyone can be a victim, everyone can be an oppressor, should the situations call from it, and we can make decisions based around these things. And you're finding that if law enforcement isn't going after people, it's the political mob that's going after people and, restricting who can have business done with them as well. That's just sort of the economic reality that the West is moving towards. And then you have the East. And if you could say that the West's monetary or currency ideology is that you must sympathize, you must have compassion, or you're a terrible person, the East's version is you must submit. And everything in the East is about control. There's a unanimity behind kind of supporting the state in their actions in a lot of communist countries. I don't know what the status for China, but you have a former Soviet nation, Turkmenistan, where 90% of the citizens work for the government. So there is no dissent. There is maybe a little bit of political correctness, but ultimately people are much more unified in these systems. And so the ruling party just tells you outright what you can and can't buy. There might be a bit of a social mob aspect as well, but the state is much more powerful in these economic systems. And you also have things like credit score, and you don't just have restrictions on things like speech, but you have behavioral molding that is done by the government as well. So again, things like social credit scores, the government deciding if they want to move certain agendas forward, you can't buy X, Y, or Z. Again, we have versions of this in the US or Canada. You have laws that, like sin taxes that try and discourage people from, spending gratuitous amounts of money on things like alcohol or fancy cars. But in the Eastern countries, you flat out wouldn't even have taxation on these things. You would just not be able to purchase them. And you could even say that property ownership is something that can be more of a variable in these places as well. And so, like the West, there can be political corruption. These governments can be overthrown, of course. But at the end, until there's full system change, generally these countries will gravitate towards the government backstopping everything. So while in the West we might have a lot of income inequality, the government is not going to bail out people perpetually for everything. You might be able to do that on a US dollar reserve currency, but there's going to be limits. And in my opinion, there's no path in the Western countries for the governments to provide for each and every one of your needs. You're not going to see the government basically providing things like housing here in the West. I just don't think that's ever going to be a reality that reaches like a full scale of the population. There is always going to be a semblance of a free market in the West, where else in the East, the government's ultimate goal is to provide as many resources as possible to their citizens, all types of things that take care of them. And again, there is a lot more of one cohesive political viewpoint. Dissenters be damned in these situations. And then you have, in my opinion, what is kind of the next evolution of all of this. And it goes back a little bit to the days of nomads and tribalism and maybe a bit of anarchy, and that is decentralization. So we have Bitcoin, we have Ethereum, we have these different currencies, and we're finding now that there's a lot of things like El Zonte in El Salvador, where they're just starting these little circular economies. And it seems so small right now. I have to go make little documentaries about it, but there are these towns all over pockets of different regions. A lot of them, more in South America, but a lot of them popping up in Africa, where basically people are looking for new ways of commerce and they're willing to experiment with these more decentralized systems. And so the name of the game in this is, if the West is about you must have compassion, and the East is about you must submit. These decentralized communities, I think, are a lot about you must have caution. Because at the end, if you are fully in control of your money, and there are no such thing as centralized custodians, not to say that you need to live with one eye open all the time and check around every corner, but because you are in full control of your money and your funds, you need to be very cautious with everything that you do. You need to be very hyper vigilant and educated that your money cannot be arbitrarily seized from you, or it cannot be arbitrarily seized from you, but it can be extorted from you, through a neighbor that hates you, right? Or it can be extorted from you through scams on the internet. So it requires a sense of, you get this sovereignty, but this extra need for vigilance in a system like this because, there's just people trying to grab your Bitcoin or your decentralized money any way they can. And in these systems, there's no refunds if some of this stuff happens, and no recourse unless people want to band together and, just systematically bail one another out. There's an example of this with Ethereum back in 2016. There was a big thing called the DAO hack, and 16% of all Ethereum was caught in this one project done by a hacker. And so the community decided they had a hard fork, but what essentially happened from there is that they created two currencies, Ethereum and Ethereum Classic. And so the methods in which to enact law enforcement in these places to get people to cooperate, law doesn't have as much power. And so it requires a lot more honesty and cooperation between each member of this society. And in my opinion, I don't think we'll ever really see a large-scale version of, decentralized money only. There will always be another system to fall back on because, again, these things do not scale to millions of people. These circular Bitcoin economies, in my opinion, for now, until they have custodians providing that sense of safety, you're going to have a whole bunch of people who don't want to participate in these systems. So again, constant caution. Nobody's protecting your ownership. It's sort of like back in the olden days. You might have had these nomadic tribes, and maybe the tribes had a chief, but the chief was not the end-all, be-all law enforcement. Everyone at the end was kind of out for themselves. It was a lot more tribal, nomadic, and you would come together to cooperate on certain initiatives, but the name of the game is sovereignty. And the upside to all of this system, while it seems very risky and scary for people, it's very accessible for people. And in my opinion, over the next 5, 10, 15 years, you're going to see so many countries have their currencies essentially collapse because governments are going to struggle with the new world order. They're going to struggle with, Russia being banned from importing oil or Russia selling oil in a different currency. You're going to see, climate disasters happening in certain countries that prevent them from, creating their own goods, and they'll have to import, but other countries won't want to accept their dollar. There's all of these causes right now going on with globalism that are making it very hard, I believe, for emerging markets to be successful with their own currencies. So in my opinion, what the decentralized path offers is this ability to switch to another standard very easily without giving up as much sovereignty, or without giving up your nationality as much. Where if you submit to either the East way of doing things, you adopt like an Eastern standard, they're going to want to enact certain worldviews on populations. And if you adopt a Western economic standard, they're going to expect that you follow along in terms of things like ESG mandates and not doing business with unsavory countries and things like that. The decentralized economy and the decentralized currencies allow you to, I guess, move a population onto a standard that at most requires vigilance, but does not require a full-scale overhaul of culture and nationality. So, all this mumbo-jumbo aside, each of these systems are a trichotomy, and I don't think that either of them or any of them are perfect. I think the perfect version of these, or the best version of these, would be to have a decentralized currency that a lot of countries use that is backstopped by intermediaries that ensure things like fraud can't happen, and basically give people a choice. In my opinion, a world that would be a better world is that every country accepts Bitcoin, but also has their own sovereign currency. And the question from there will be, how do you enforce that the people who decide to choose a Bitcoin standard for their denomination, decide to work for Bitcoin, how do you ensure that those people also contribute necessarily to societies, right? You have to have an honesty policy. Otherwise, those people can just not pay taxes. And the only thing that's going to really stop them is, either the law enforcement that you enact on them, which is like the $5 wrench attack, or their neighbor who will pressure them into being a part of these societies. So a lot of this stuff is very hyper-futuristic, but in my opinion, thinking about all these different methods of running a economy and a society, I think we definitely are going to see an East and West, way of managing money, and I think the bond between Russia and China will grow really, really strong as a result of the invasion in Ukraine and seeing what has happened to their ruble down, I think, 40%. Bank runs going on in Russia, people running to banks, withdrawing all their money as quickly as they can. Russia will need support from an ally, and Russia has a lot to give to China in terms of resource exporting to help their economy. And so that's going to be the stuff that I'm really interested in covering over the next few weeks and months, is when is Russia really going to take a position in all of this? Because they've tried right now to kind of stay quiet, stay in the background. You've heard a few state officials come out, but I think the bond between Russia and China grows stronger. And that bond, I think, will overflow into countries like India as well, and some of these other East Asian countries, and perhaps even the Middle East as well. Um, so yeah, curious what your thoughts are on all of this. If you think I am just talking like a load of bullshit, if the U.S. dollar is still absolutely the name of the game, or you know, and I guess personally, like how you would like to live your life. Do you want to live in a system where it's very sovereign and you have to be watching around every corner for your money, but you still have all that freedom? Or would you just like things to go back to where they were in 2019 in the West or before all the woke culture? Um, and do you think that woke culture will persist over the next 10, 20 years? Who knows? Um, so quickie stories here. Some really interesting things happened this week. A Swiss city of Lugano made Bitcoin and Tether de facto legal tenders, which is really interesting. So again, what you're finding is that the way that Bitcoin is becoming a legal tender is, El Salvador is an outlier case where a whole country said, let's do this, right? But even if you think about El Salvador is a very, very small country. So they're able to, a large population, but they're able to enact these kind of sweeping policies and try them out a little bit easier than a more spread out country. But again, Lugano, another city in Switzerland that is making Bitcoin and USDT legal tender. What I'm going to look forward to and what I'm interested in is seeing how this spreads throughout Switzerland and hence Europe. That the Swiss government is interested in this sort of thing, and they're able to kind of, it's not going to be legal tender in all of Switzerland, but the Swiss government is interested in, able to enact this stuff is quite interesting for the future as well. Another quickie headline too is there was a lot of talk over the last year that people were actually more productive working from home than they were, working, in an office space. But you're seeing every single big tech company now basically mandating that people come back to the office. There's a couple holdout big tech companies, but I think they would only be doing something like this if they thought there would be a tangible benefit to bringing people back to their offices. And maybe they just want to have a justification for paying all the rent that they do for these prime locations. But I think that there is kind of this consensus going on in the tech industry, and I've yet to kind of see facts to back this stuff up, that there is some productivity missing from having that social interaction in the office. Probably less to do with workplace productivity, but more employee satisfaction. I think after 2 years, people are kind of sick of just working at home all day. Quite a few people. Another interesting fact is $40 million US dollars have been donated to Ukraine. And there's a small contingency with some of this. As you can kind of notice in some of these graphs, there was like a huge uptick in donor volume. I think basically March 2nd to March 3rd, and that was because Ukraine was actually talking about giving out an airdrop to all the people that donated, or an NFT. So, I don't like incentivized donations, but again, all this stuff's going towards a good cause. People aren't getting their money back. They knew what they were in for. So it's cool to see all this financing happen, and it's also another feather in Bitcoin and cryptocurrencies cap that you can raise all of these funds so quickly without a middleman. Because right now, a lot of Ukraine's banking services are down, and so, how do they get the funds? Well, they get it through cryptocurrency. The question from there will be, how do they spend this stuff moving forward? How do they, how do they turn this into food or weaponry and things like that? And in my opinion, what will likely happen is there will be someone who can provide them these things with a loan backstopping it, which will also be very interesting to see. But they don't have great cryptocurrency exchanges in Ukraine right now to deal with all this. Lastly, and this kind of segues more into the next story, but Russians apparently can't find buyers of their oil now. And so there's a lot of market participants that aren't willing to buy Russian oil, again, due to this kind of social woke pressure from the West of not wanting to do business with Russia. And even though Russia is this massive net exporter, they're now losing a ton of their trading partners. And there was speculation that early on that, they wouldn't be hit too economically because countries like Germany rely on them. But you're finding that now people are saying, we'd rather take the hit, we'd rather import oil from other countries at premiums than buy Russian oil right now. So lastly, I want to talk a little bit about the oil trade. So, what do we know right now? We know that oil is skyrocketing to levels that have not been seen in, several years. It feels like just yesterday oil was actually negative dollars per barrel during COVID, but now it's hitting record highs. In my opinion, as long as this conflict keeps going on, you're going to see people look at it like a safety trade. And so you can play this a few ways. You can just, buy oil stocks or these oil ETFs or Exxon or whatever. In my opinion, though, these things can be very volatile. And so, oil might drop 10% or rise 10% on just headlines, right? But we know that in the long term, there is going to be a quarterly or a yearly impact on this new $100 a barrel standard that we've moved to. And the question is, what companies are going to thrive because of this and what companies are going to sink because of this. And so I have two examples of stocks, and they've actually, I wrote this bit like yesterday, and then I watched the trading action today, and there was some fundamental news that might have accompanied this, but it's a perfect illustration of how rising oil prices can help certain companies and hurt others. And essentially the two that I have here are Uber and Kroger, the grocery chain. I believe they're just in the US. They might be in other countries. Who knows? So if I believe that oil is going to stay elevated, I believe in a couple of things. Number one is that even Jerome Powell himself says that if the price of oil goes up $10 a barrel, it can drive inflation up by 0.2% alone and kill growth by 0.1%. So there is a direct correlation, obviously, to the price of oil and inflation. Obviously, too, it makes the cost of importing, exporting goods so much higher because of all these, we haven't moved to electric semi-trucks yet. So oil is still so necessary just for any type of importation or exportation of goods. And so a lot of companies that produce, products, they pass these costs on to the consumer. But as we know, when inflation hits, you can get things like stagflation, where you essentially have a recession, but instead of prices depreciating because of the lack of labor force participation due to what is going on with oil and, inflation around the globe, you get rising prices, but people are losing their jobs. And what that essentially creates is this complete ditching of unnecessary products or items or services, and people being thrifty about the types of things that they buy. So Uber is an example, I believe, that is going to get really negatively hurt by rising inflation. And you might look at this chart and say, well, wow, it's already down like 50%, right, from the all-time high. But I look at this as a potential shorting opportunity because if you just zoom out to the weekly here, this chart, nary has support under $28. We close right at the low of the week. And fundamentally, what is Uber, right? Uber is a taxi service, and taxis are not necessary for anyone. You might think they are, but there's public transportation, and public transportation is pioneering in electric right now in major cities. Uber is also not a profitable company by any means either, right? Uber is constantly hemorrhaging money. They're paying drivers, they're taking 30%, but they have to stay cost competitive with taxis in the city as well. The thing is that Uber does not have control over their fleet like a taxi company might. And taxis for years have been moving towards electric and hybrid vehicles, but Uber doesn't have the same say. They probably have a backlog, and they've seen that people have trended towards electric vehicles. But the facts are is that Uber still has a lot of gas guzzlers on the road as part of their driver fleet. And what's going to happen, this quarter as oil prices have gone up 50%, you create this vicious cycle. You have drivers that are now seeing their fares likely not rise as much as the cost of oil, which is one of their biggest costs outside of maintenance for a vehicle. And they're going to look at this and they're going to say, hey, hold on a second. My fares have not gone up substantially, but the cost to do business has. And it doesn't really make sense to me to keep doing this, right? And so what happens is drivers opt out of Uber. They decide, going to wait till gas prices go down or maybe get a job somewhere else, right? A lot of people just do it as a side hustle. And then what happens? You have fewer drivers, and that leads to higher prices. You have a lot of demand. That demand might not be changing right away, but the supply does. And so in my opinion, I think Uber is, despite going down, it is a solid short compared to basically what is going on with the price of oil. Under $28 from a technical perspective, it has zero support until about 13. And we've seen just, one of my favorite stocks, Square here, just what happens when you lose these key supports. Square had a key support of 191, but it just kind of ripped up diagonally since, the bottom of the COVID 2020 panic. So yeah, my take, Uber's a short. Then you have the very polar opposite of this, and I don't know the fundamental news behind this. I think it was some earnings basically, but Kroger is a grocery chain. And so grocery chains, they basically have fixed margins on the stuff that they do. If the prices of their wholesale items go up, they generally raise the prices of their food accordingly. Sometimes they look to enhance their margins, but you have to realize too that grocery stores are regulated very severely. So grocery stores are not allowed to go out and just price things whatever they want, especially for necessary goods like produce and meat and things like that. But prices go up based on the cost of production. And so we know transportation costs are baked into basically every food. Everything that you eat, from meat to vegetables, all this stuff has to be imported on land, by air, by ship. That guzzles oil, right? But the other element to this is that there's no escaping the grocery bill. Now, you might say that in a recession, people choose to eat less. There is facts backing up that during recessions, people choose to eat less healthy as well, right? They might not buy as much organic produce, but you have to buy staples, right? You have to buy bread, you have to buy milk, you have to buy meat, and there's no escaping the cost of a grocery bill. And so what happens is that a company like this will positively benefit from rising transportation costs, in my opinion. There's also a general consensus that these companies are kind of safe havens during recessions. And I'm sure, let's just go back to 2008 here. I'm sure this company got hit during the recession, obviously. But, you can see that, this is April 2007, 2008, gets cut in half, right? Maybe a little bit less than that. But, by 2012, back to all-time highs during the world's global financial crisis. And that's because they're supplying something essentially to people that is, 100% necessary. And then right now, on a technical perspective, this stock is in blue sky breakout. So again, just on a fundamental basis, if you're looking for trades for inflation, you want to look for companies that are producing or selling things that everyone has to buy, right? And that might fall into value stocks. But you can look at things like Coca-Cola. I'm sure fast food companies benefit from this as well. To some degree, it's hard because these companies are very diversified, but technology producers, hardware producers will likely benefit as well because, the cost for them to produce things like computers get cheaper every year, but they still need to import them, right? And, I'd say even through a recession, you're going to still see people lining up to buy new iPhones. And if anything, even if there is a big global recession, while some of these stocks might come down back to earth, they will be amongst the first to recover because they have good cash flow. And again, people need to buy their products. They need to stay up to date on things like food or things like lumber as well. I think Home Depot is a really good bet as well. So yeah, that is it for today. Let's check in with the chat and see how many of you think I'm completely off base here. $20 say that he has a crypto-themed shirt or sweater. Do I seek discomfort? Well, this could be construed as a crypto sweater because being in the crypto markets is very uncomfortable. Hey, Bennett, how's it going? Bennett and I went from talking about carbon credits to likely going skydiving in Puerto Vallarta starting next week. So that's fun. Wedding. Second best TCG mod. Switzerland becoming more progressive. Yep. Yeah. It's interesting, and I would put like Chevron and these gas companies as one of these companies that will, even if the price of oil drops like $20, $30 from here, I think that I don't think the stocks will just immediately correlate with the price of oil. I think they are laggards to the price of oil, and so they will have very good quarters at the end of all this. Another thing to think about too with all of this is in Europe, they're having record natural gas prices there, shortages and stuff, and we're in this kind of weird twilight zone of government policy where we're seeing bailouts, where things were never bailed out before, right? So you got to think one of the great things about the oil or the food trade as well, and you might even construe this to the auto companies and the airliners too, is that if the governments think that they're mandatory, they get backstopped. And I've always said that like sometimes those are the best businesses to get into because they have floors, right? Governments will not let airlines fail. They won't let car companies fail. They won't let grocery stores fail. Now, again, I'm not a value stock guy now overnight, but it's just something to kind of consider that if we end up going into a global recession or a stagflation, chances are that it'll be very hard to raise rates because as people are suffering, government's inclination will be we need to do bailouts, right? We need to get more into debt, and therefore it doesn't really make sense for a lot of centralized governments to raise rates as governments have to get increasingly more into debt to do things like stimulus packages again, right? And I've just said, since the start, the Fed is between a rock and a hard place right now, where I'm sure they don't really feel like they want to raise rates during all this calamity, but they want to combat inflation. But it's just, it's just out of their control. You understand my thesis about Uber Lyft, but the need for it might be greater than you think in the US, not just luxury service. Yeah. I mean, it's so interesting. Like, you have to look at people's income versus the average cost of an Uber. Uber might not be such a big deal in certain countries. I know here, if I want to go a kilometer, right, it's like $25, but the same cost is, $3 in El Salvador. We make different incomes where proportionally my buying power for Ubers might be a lot better. And so you're right in that, they are a very international company. And, even with the rise of the price in oil, certain countries might not be as affected. And then there's also the other element too that, gas prices don't always correlate with the price of oil, right? It's about how expensive it is to import and export. And if you're an oil producing country, you have a lot cheaper gas prices. And so it might go up 20, 30% in your country, but it won't go up 50 or 60% like in places that are not energy independent. So I still think, though, that a large portion of the revenue generated for Uber is in these Western countries or Europe where they're not energy independent, but they still have high populations. But who knows? You have a country like India. I don't know if India, drills a lot of their own oil, but I don't know. People use tuk-tuks and rickshaws there. I don't know if that's a good question, actually. If anyone here is from India or knows, can you register for Uber with like a tuk-tuk or a rickshaw? Or does it have to be like a car? So, curious. Clients were using Uber to get to appointments. They literally could not, and insurance, Medicaid was paying. That's a good point, too. That's interesting. I didn't know that insurance or Medicaid would pay for that type of transportation, but I guess they kind of have to if there is no public transportation. You're right that, there is a deficit in public transportation in a lot of cities, and that Uber is basically, making the impossible possible for some people. So, yeah. All right. That is it for today. Hope you enjoyed the show. If you have any requests, of course, feel free to pop on the Discord. I try to make this one more finance focused, but maybe next week we'll go back to talking about some more Russian developments, Ukraine developments. I'm going to try and stay live over the course of the next month, but I'm actually going to be out of the country. I'm going on a big hike in Peru. I'm going to Puerto Vallarta. And also, if you happen to be going to the Bitcoin 2022 conference in Miami, I will be there as well. And I want to see your faces. Also because I don't know how to get around Miami. So yeah, if you're going down there, send me a message. We'll meet up and we'll talk all things Bitcoin as well. And, maybe I'll film a video down there for those who can't make it as well. All right, everyone. Thanks for tuning in, and I will catch you next week.